Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I am going to talk to someone who is in a hot market right now, really hot market. So I'm going to talk about that as well. But we are going to talk to Tom Staub. He's the CEO of Red Oak Development Group and founder of the Real Estate Investing Academy. And actually, I was looking at his bio. He's also CEO of Doorscout LLC, co-founder of Grand Canyon Glamping. So there are a lot of things he has done, and he's a real estate investor and developer since 2011. He does a lot of land development deals, and that's what we are going to talk about. Welcome, Tom.
Hey, how you doing?
Good. How are you?
I am busy.
Busy is always good, as I said.
I agree.
Yeah. Hey, tell us something interesting or funny about yourself.
Oh, man. Interesting. Well, it's funny. At least to me, it is. I almost got into real estate to really support what I wanted to do initially. And when I was in my mid-20s or so, I play guitar, right? 20 some years. Okay. I come from a family of musicians, and the goal was to build up a portfolio to be able to quit whatever job I had, move to Nashville and play full time, right? So as it would have it with real estate, it didn't happen. I started buying properties, doing flips, syndications, commercial, now land development. And I absolutely love what I do. And I would still play in Nashville, but it's going to have to be a side gig now.
That's pretty interesting. And but you are in a good town as well for me.
That's right.
It's not too bad. Yeah.
That's right.
So how and when did you start investing in real estate?
I'll thank California to some degree. I started my career in California right after the crash. And back then I wasn't making a lot of money. Always been pretty savvy with money and whatnot since the age of 16. But back when I was in my early 20s, I was trying to buy a house, and I would save every penny that I could. And the price appreciation just outpaced me. And I said, you know what, screw this. I'm not going to have cash in the bank. So I bought a few properties in Indiana, and then I kept buying. It's highly addictive, as you know. I started buying in Ohio, in Alabama, in Texas, and then just the journey of real estate that it is. Went from that to flips, which did a few of those myself. And after slipping a disc in my back, and then so I was like, all right, this is not worth the pain. And then just doing bigger projects. And, if you follow the money, you end up with land development, I think.
So when did you buy your very first investment property, and were you still in California when you bought that?
I was in California. I bought it in Indiana, though, back in 2009.
Nice.
That was my first little project. I'm 36, almost 37. So back then, what is that? 12 years. So I was 22, 23 years old.
Oh, yeah. I wish I would have known about real estate when I was 22.
Yeah. Well, it's interesting. I started at Morgan Stanley out of college. Back then, that's when iBanking was very sexy, right? So I got into Morgan Stanley, and that's when I learned that to really compete in the stock market, you have no chance. These people have CFAs behind them, platforms that do all the math.
Hedge funds.
So to think that you're going to beat the market, first of all, the people on Wall Street that even try, only 1 out of 12 beat the market.
Correct.
So that's when I really learned that the stocks are not going to be the long-term thing for me. And then I found real estate from that. So.
Oh, that's great. And how did that first property work out for you?
That was great. It's funny. I'm actually selling it next week. So it'll close next week.
Wow. So
I've had it for a long time.
Wow.
Yeah. I had one tenant the whole time.
Really?
Yeah.
That's
great.
Crazy. So if you didn't have turnover, oh, wow. That's pretty cool.
It was amazing.
So how much did you pay for, and what are you trying to sell it for?
Yeah. I bought it for $115,900, and it took me everything in my power at age 22, 23 to save that $25,000, and I'm selling it for about $205,000, which, pretty good return. Go ahead.
Especially you had tenant all the time. So
it was amazing.
It's a great return. You're not even looking at appreciation, because that appreciation's about that much appreciation is barely beats the inflation pretty much, right?
Yeah, exactly.
But you had tenant all the time, so you recovered your $25,000.
Yeah. So
that's great. So let's talk about. So you started at age 22, land from rental, then buy and hold to flip to everything else, and then so why a land development? And can you actually define land development for us?
Yeah, so land development is really 3 phases, at least how I see it. Some people see it as 4 phases. Phase 1 is really just acquiring land, and you could just flip it as is. This market, it's interesting. That can be complex. Typically, you have to do what is at least phase 2, otherwise known as building horizontal. And that means that you're building out the utilities, right? Sewer, water, power, and oftentimes internet's free because the providers will do it for free. But that's a really complex beast with, the city council's approvals and permits.
Yes.
And then phase 3, or what is called building vertical, is when you would build houses or resorts or whatever it is on the horizontal, right? So.
Oh, that's interesting. And actually, because I was thinking, because I'm going through this, my partner and I acquired about 12 lots in Central California, and we are actually going through all this approval right now.
There you go. Yeah.
Build about 12 single-family houses. So that's another side project I'm working on.
But that's where the money is, right? I mean, it's a lot more risk, a lot more complex, but if you have the right team in place, you know what you're doing, the money is substantial.
So, and when you say land development, you don't actually build the verticals, right? If I'm understanding correctly, a lot of people just do the entitlement and then sell the land.
Yeah, it depends, right? In Arizona, I do all phases. I build horizontal and vertical. So we build a 60-acre subdivision out there, embarking now on a glamping resort for my company. Yep. And that's near the Grand Canyon. Just phenomenal rates on those rents out there. Anyways, and then in Texas, around Austin, we just do horizontal. It's interesting in that Arizona, actually, when you build vertical, the prices and the margins are really attractive. Here in Austin, Texas, even with the price increases, the margins, it's just riskier. The supply chains and the, crazy prices of plywood and now, metals and copper, it's becoming risky to build vertical.
Yeah, I'm seeing that. Actually, by the time we had put our plans in place and the amount of, the labor and the lumber and everything went up, on my other property at Mobile Home Park, we ended up spending significantly in just rehabbing the home.
Now, you're probably lucky because we're able to pass those prices through on prices right now. But I think we all know that there's some softening in the market, still appreciating, but it's at a much slower pace.
Yeah, which makes sense, right? Because before, when I thought that, the prices are going through the roof for the houses and commercial, but they were just following the prices. It was the CPI, right? Inflation plus the lumber and copper and labor and everything else in last year or so. Now that lumber has almost dropped, 80% from the peak in May. So I think we will see that softening of prices, as well as I don't know, you may know more than me, but I see it as stabilization, right? Because it was just crazy last year or so.
I'm always in debates with people, and I usually know I tend to be contrarian in most things, but I had this debate the other day. The market is willing to pay a premium for housing right now, right? So for example, in Arizona, our homes, they're pretty standard, 3 2-bedrooms, 1,300 square feet, single story, slab foundations. We can build those for about $130, okay? Not including land cost. We're all in for about $200,000, okay? We can sell them for $429.
Oh, wow.
Okay. Now what we're seeing with builders, including ourselves, we're not using 2x6s anymore. We're using 2x4s. When you think about the framing, a good house will have 16 to 18 inches, right? Which means a cheap house will have 24 inches or 22 inches. When you think about that, if it's tighter in space, you have more material. Okay. So builders are going cheaper with cheaper wood and bigger spacing. They're not doing pitch roofs. They're doing flat roofs, which is way cheaper. They're not doing unique angles. So builders they're always going to optimize profits. Why wouldn't they? Right. So
of course,
the debate of, builders will just drop price. They'll only do that if they have to sell their current inventory. Right. And, and if you listen to any of the earnings reports of Toll Brothers and Lennar and KB Homes, they're public, by the way, they have to hit a 25 to 30% margin on their product. Anyways, I don't think they're going to reduce price unless they have to in their bigger communities. So.
And does it matter? Because in real estate world, especially, it's market specific, right? So I think you are talking more from Austin and Phoenix perspective or Arizona, right? And I'm in San Francisco Bay Area. The prices went through the roof. And of course, it's totally unaffordable because everything is like $2 million now. Yeah. Right. So do you think over here the builders will have to drop the prices?
Man, you know what? Building in, God bless you, but I try to avoid building in places like California, Oregon, Connecticut, New York. Yeah. I have a big debt partner in a lot of our deals, and he's like, hey, I have these 2 lots of plots of land in California. Do you want to take them and, take over the debt? And I was like, they're good numbers, but I don't want to deal with 3 years of permits.
Yes.
I don't want Texas, like in Texas, 4 to 6 months, I'm in and out. It's a few approvals. We know the county engineer. It's easy peasy. I get scared over there in California.
Yeah, and no one can predict what will happen in 3 years, right?
Yeah, and I don't know. It's a beautiful state. So I've never been able to figure it out. I thought it would crash years ago,
Yeah,
and
me too.
people were still paying,
Me
$1,200 a square
too.
foot.
Yeah, yeah. Yeah, I was thinking even last year and this year it would crash because people said everyone is moving to Austin and Dallas.
Yeah, right.
They are moving to Phoenix and Seattle and Raleigh, and still it kept going up.
Yeah.
One of our single door, I think neighbor's house, which was sold for 1.3 last year, sold
Mhm.
again for 1.7 in a year. And I'm like,
It's
how do you
crazy.
do that? That's
What's amazing? I was just doing a report yesterday on the supply and inventory of the market, and just doing some like national reporting. And Los Angeles, home of 64,000 homeless people, right?
I
Meth
believe you.
everywhere, a
I
collapsing
believe.
economy. People are moving on left and right, but the supply is only 1.4 months.
Exactly. Yeah,
So it's
I don't
like
understand.
it's because there's so little housing on the marketplace
Yeah,
that even with all the migration out, to your point, there's not enough supply. It's
exactly.
phenomenal.
Hey, so let's talk about land development. Why did you decide to look into land development?
Well, I mean, selfishly, it's just fun. I really enjoy going out on the land and talking to the owners, and you are literally reshaping cities. I mean, how cool is that? That's at the core of it. But also one thing that when I read Grant Cardone's book, which is actually a great book to get started on, one of the things he says, which I don't necessarily agree with, is buy big first, which is crazy. He's like,
Go big.
don't buy anything less than 40 units. It's like, I don't think that's true, but there's some truth to that. And the truth is that bigger projects, while they're more complex and they have much bigger dollar signs, the risk is actually much lower in some ways, right? So for example, that when you do a flip and you tear down some drywall, there's a good chance you're going to find some extra work.
Asbestos or these
right?
and that.
Exactly.
Yeah.
And if your margins are only 20 grand on the flip, you really can't afford to find too much extra work.
That's true.
Right. But if I have a land development deal and I have a construction, budget of $10 million, and I come across a situation where I have to install a fire hydrant, it's going to cost me $250,000. It doesn't really, it affects the deal a little bit, but it's not the end of the world. I have plenty of margin left to go. And so bigger numbers, I think, offer bigger safety against downside ultimately. So knowing all that, land development is where the big numbers are at. And, our average deal size on the exit is anywhere between $10 to $30 million, right?
Oh, wow.
So and margins tend to be 20 to 30%. So we can eat a lot of risk. We can afford, 30% corrections in our deals and still make money on these things.
That makes sense. So can you take us through the process of identifying land and then selling it for profit? What exactly do you do? How do you identify?
Yeah, this is a 6-hour podcast, right?
Yes. Yeah. 6 hours and 10 minutes.
That's right. Yeah. So I'll keep it really simple and brief, and it's going to vary market to market, right? But probably the most important thing that comes down to is the city. What does the city want? Do they want high density builds? Do they want 5-acre lots, right? So understanding who you're working with and what their map is for their future communities is really important. But once you understand that, assuming everything's kind of basic and people will allow a subdivision, typically you look for square or rectangle plots of land. Okay. Not a lot of topography, kind of flat and basic. Some trees are fine. People do like trees in their yards, but that can be a problem too for site clearing. Think of it as like a basic piece of farmland, square, rectangle. Okay. 2, you want ideally to have a lot of road frontage. So if the road is covering the land, fantastic, right? And then maybe even more importantly, utility access. Is there city water? Sewer is huge. Is it septic or sewer? Sewer will make the project way more attractive. You can, just for example, typically you can build about 5 homes on an acre of land if you have sewer. And if you don't have sewer, if you're lucky, 1 home.
Oh, wow.
Right? Just because of the laws and codes around sewage.
Right, that's true.
So utilities, road frontage, kind of the shape of the land, and then what the city is willing to give you is really the main components. And then of course you just got to figure out all the pro formas, but it's a long process. We spend countless hours, 60 days to even evaluate one piece of land, and we usually kick out most of the deals. We get a 20% conversion rate when we get a deal in front of us. So it's hard to find good land.
Oh, that's great. And then once you have identified the land and you figured out this is the land you want, and once you acquire it, what do you do?
Yeah, great question. So the acquisition, we have debt partners that love us. They will fund 60, 70% of the purchase price. And then we have equity partners, that being investors from my network or whatever, that will be the equity player. And we offer 25 to to 30% returns annually. So really good returns. And then it's really all about connections. Having a track record like we do helps, right? The banks love us. They know we have a good resume. So they give us great terms. And I can get $5 million from a bank in, 10 days. Now, I tell you, in the beginning, when I first started in Arizona, I had to personally guarantee, and I didn't do this, to even get like $500,000. I had to fight for weeks to convince people to give me money back then. So like, it's a journey.
Yeah, I've been through this. I can relate.
Yeah.
So once you have the money, you acquired the land, what exactly do you do?
Yeah. So typically the first phase, at least in where I develop, Arizona's a little longer. It's about 6 to 9 months of permits and what is known as entitlements. So that can be back taxes, getting the surveys done, all the studies done, the soil studies, environmental, traffic studies, all that. That's about 9 months in Arizona. It's about 4 to 6 months here in Austin, Texas, not in Austin proper, but outside of Austin. And so once you have that, then you get the approval from the city and then you're ready to build. 6 months in, give or take. We have shovels in the dirt. We're putting in utilities. That takes 6 to 12 months, depending on the size. And then we usually have contracts in place to sell the land before we even buy the land. So typically these things take 18 to 24 months, these deals, and we're in and out, selling them to builders and on to the next one.
And who are the people who buy this from you, right? Are the builders ready to build or?
They are, yeah. So in our bigger projects, we work with, D.R. Horton, Lennar, KB Homes, Castle Rock, Taylor Morrison. In our smaller projects, we have a list of about 40 custom home builders. Like our smaller ones will be like 1 acre lots, septic, kind of tailoring towards a more luxury product. The big guys want to buy, again, those cheaper homes, the ones that they can spit out, 4 per month.
Got it. No, that's great. Yeah, once you have that relationship and when you already know that whatever you are working on, you can sell it, as soon as you turn it around. That's awesome.
Yeah.
So what's your personal investment criteria for finding this developable land, right? I think you mentioned square to rectangle.
Yeah.
But and city water and sewer as well as road. What else? Like, is that population size you look for?
So population, it's all supply and demand, right? So population growth is huge. And I have a number of databases, Zonda, which costs $28,000 a year for us to have that per year. Great data. John Burns is great.
Oh yeah, John Burns is who fantastic. I follow. The book is awesome. That's how I got started.
Yeah, he's fantastic, right? So he has great stuff. Just talking to builders helps. They know where all the stuff's happening at too, right? So, but the St. Louis Fed has a really great website for free, all kinds of data there. Cityvibes.com. USdata.com. Like there's just so much out there that can really show you what's going on. So Neighborhood Scout's another good one.
Yes. Yeah. Neighborhood Scout as well I have used. So I think this is great. And because I'm trying to think how I compare, I mostly do buy and hold, right? So, but buy and hold gives me a lot of depreciation and tax benefits. Is this similar to fix and flip? What are the tax implications?
Yeah, great question. So when we bring in investors, I really shy away from investors that don't have a tax plan, because when you're involved in these projects, you're getting a 30% return annually.
Exactly.
That's a lot.
That worries me.
Yeah, right. So that's a lot of cap gains, right? And now the first year is going to be a loss, so you wouldn't see your gains until one tax year after. But the simple way to do it, that I encourage people to do it, is a deferred sales trust. And
DST.
Yeah, look into that. But ultimately, depending on how much capital you have, because they're not cheap to manage. But if you're a higher net worth person, you have like $1 million, give or take, a really good vehicle, give it to the trust, have the trust invest, and then you can really manage your cap gains tax that way. Otherwise, 1031s are eligible for land purchases, but you have to be the sole person on title. So that gets tricky.
Oh yeah. You'll have to do the JVs and.
Yeah. The other option is that you work with us, and we do this with some investors. You work with us and we more or less defer your gains with you to figure out when you want to realize those gains. Right. And so if you have the right team in place, you can work on those partnerships and say, hey, look, I don't want these profits this year. Can you put them in the back and just hold them in like in reserves? And so we'll do that so that you can position, tax shelters along the way. My worst nightmare is that an investor gets a 30% return, then has to be taxed at 30%. Like that.
Exactly.
That's insane, right? It's crazy.
Yeah. That's why I asked, because I'm always, whenever I invest nowadays, as you said, the more savvier you get, you always think about the exit, right?
100%.
Every time
Spot on. I tell everyone, we're thinking about exit way before we exit. I mean,
Yes.
way before.
Right. So I'm always thinking, okay, what would be my tax, right? What bracket would I be in?
Yeah.
So would this be considered a short-term capital gain or long-term capital gain?
Yeah. So 12 months, right? It's so under the, I think it depends. I think it falls under the 24 months capital gains tax. And that's the thing, right? These are 2-year projects. So, do you want your gains on month 18 or do you want to push them 6 months out?
Yeah.
Most times if we're that close, you just push them out to,
exactly
the second year.
I agree. So the next question I have, where do you see the biggest opportunities in real estate right now?
Well, I mean, again, land's great, but outside of land, I think if someone comes up with a way to build affordable housing that's high quality, that is financeable, and high quality, financeable, affordable housing that makes, 40% margins for builders, that will be the next home run. Again, builders make 25, 30%. If someone produces, and we hear these ideas of the printing of homes.
Actually, I was going to ask you about that.
Yeah, it'll help. But if you look at industries across the globe, the one industry that has had the most evolution or advancement over like 200 years is construction. It's so far behind the curve. I mean, we still use manual labor for everything pretty much, right?
Yeah, that's true. That is true.
And the printing has some promise, but it's going to be really hard to do things with that, like framing and whatnot. So a long way to go there, but someone will come up with a way, I think. And if they can figure out a way to build affordable housing at scale and do it with big margins that's financeable, oh man, I mean, you're talking billions and billions.
Affordable housing is the key right now. I agree.
Yeah, I do think.
I actually invested in Mighty Homes. So I've been looking at Mighty Homes, Model, and a lot of those printing companies.
Yeah, that's where a lot of the trends are going. Kind of the modular, like unpack 3 days thing. Yeah. You have financing issues there right now. Right. The other one that we're seeing a lot of trends, and John Burns does a great report on this, is the build to rent model.
Build to rent, yeah.
Right. We see Goldman and we see BlackRock and Wall Street now looking at real estate as an asset class. And think about this, right? If I go out as a developer and I have to build a vertical for 100 lots and then I have to sell it to 100 people, that is a pain in the butt, right? Yes. But what if I could just have one contract, sell all of them at once? I would probably take a lower price, get it off the books.
It's always good.
Right. So
move on, right?
Yeah. And I think Lennar was one of the first ones to do that. And they're now doubling down on that model because it's going to work.
Yeah, if it works, why not, right?
Yeah.
No, this is great. So let's take a quick break. And after the break, we'll go through the same questions I ask every guest.
You're listening to the Wealth Matters Podcast. The Wealth Matters Podcast. For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Tom gave pretty good idea about how land development deals work. And actually, I was able to relate because I'm trying to develop some single family residences. So this was very helpful, Tom. Are you ready for fire round?
Let's do it.
Would you be changing any business or investment strategy after this pandemic is over?
Quickly, I would say if I were in commercial real estate, I would be getting out right now.
Perfect timing, I know. Now, favorite real estate or finance or any other related book?
Oh, this is fire round, huh? Finance related book.
Real estate.
Real estate. I think the one by Tom Wheelwright's Tax Guide. It's probably the
Tax Real Estate. Oh, that's one of my top 5 books. Yeah. I met Tom Wheelwright as well, and I took his tax courses. That's why I asked you tax questions.
Yep.
Any tool or website you recommend or you cannot live without for your business?
Great question. I mean, Wall Street Journal, right? But I do think Redfin data, which is free. It's lagging data, but it really gives people a quick pulse on the market. And, it's a month behind, but it's good enough to really help you out understanding supply, inventory, sales price on any metro, any city, any product type.
Oh, that's awesome. Yeah. And 1 month is nothing in real estate world. It's not stock market where it's changing every day, every week. Any advice for beginner investors?
Yeah. So, as long as you're not buying a massive $1 million home in your first purchase, at least by the pro formas, it cash flows a little bit. Real estate's pretty forgiving. I've made plenty of mistakes and I've still came out ahead. I know a lot of people that have done the same thing. So I just get started, figure out why you wouldn't want to do a deal. And if you can't figure that out, then do it. And if you come across a mistake, you'll get out of it. It's not like stocks. You'll figure out a way to make some money.
I agree. How do you give back?
Yeah.
How do you give back?
Oh, how do I get back? We do a variety of things. I'm big on microfinancing for free. I don't charge anything, but I have a portfolio of 3,000 loans that I've given, mostly towards education and things that really help people move up in social class.
That's awesome. How can my listeners reach out to you?
100%. Yeah. So again, I'm the CEO of Red Oak VC for venture capital. So redoakvc.com.
Perfect. I'll put that in the show notes. Thank you so much, Tom. I enjoyed this.
Likewise.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing.